Hi guys, and a warm welcome to this week's forecast. So we're going to talk about dollar index. We'll talk a bit of EURUSD, gold, and Aussie dollar. So to begin with, we've been following through with the forecast that have been done for the past, say, 2 to 3 weeks. We've been spot on our analysis in regards to dollar directional bias. So with that in mind, we are going to take a closer look at dollar index in relation to what transpired last week, where we had a couple of banks on the calendar. We had also FOMC and some quite telling fundamentals that came out. So with that in mind, looking at this week's calendar to begin with. Now remember, everything starts with your calendar. Your narrative should start with the calendar. And as always is the case, Monday, personally for me, is a no-go when it comes to trading. Monday is a no-go. And then looking ahead to Tuesday, yes, we've got a couple of fundamentals. We also have the RBA rate decision. And the focus is that they're going to increase by almost another 25 basis points. We'll see about that tomorrow morning. Then we also have pound news. It's more of a lighter calendar in relation to the volatility that we have seen of late in the market. So yeah, it could be an ideal day to trade, but Tuesday also is not that heavily packed. Then Wednesday, that's when things start getting a bit interesting now. We've got Bank of England, Bailey is going to be speaking, and then we also have Powell on the calendar. That's definitely a good day to trade. Same applies with Thursday and Friday. Friday is going to be a good day to trade, especially for pound pairs and also, basically pound pairs. So that's the calendar for this week. So you're looking at Wednesday, Thursday to be your prime days for looking for opportunities. So looking ahead on dollar index, just to summarize what we have been talking about in recent weeks. So you can see how dollar has reacted now from the monthly fair value gap. You see, price is inside the monthly fair value gap, and you can see the reaction that we have got. Remember, this is premium. Premium of what? This expansion here. So from this swing high to this swing low, you place your feet. That's basically almost just above equilibrium, if I'm not mistaken. And that defines your premium range. And that premium range, what PDI metrics do we have in that range? We've got our monthly fair value gap. And you can see how price reacted last week on dollar index, how price has reacted from the monthly fair value gap. So you can see price has reacted off the bearish monthly fair value gap, and we have definitely now seen a good reaction. We've seen a good expansion from that level. If we go to the next lower time frame, which is the weekly time frame, you can see the reaction from the weekly bearish order block. And we've been talking about this weekly bearish order block for a couple of times now, that we need to see a proper reaction from that premium array. And we have seen that now after 1, 2, 3, 4 weeks of price just consolidating below the bearish order block. So now looking ahead into the current week, what is it that you need to see in terms of price action? What is it that you should anticipate if you're going to be participating in this market? So Personally, I would like to see a 4-hour market maker sell model, right? I would like to see 4-hour market maker sell model. So already from what I've just talked about, you need now to be in a position to have defined your premium arrays on the weekly, on the daily, up until the H4. On the monthly, it's still straightforward. Price has just reacted off from a bearish array. Price has reacted from a monthly fair value gap, and on the weekly, price has reacted off from a weekly bearish order block. So that makes 2 weeks ago candle a valid bearish order block. You see, this is last week, this is our current week candle, and then this is last week, the previous candle. We define that as our bearish order block on the weekly chart. If we go back to the monthly chart, where do you think is the likely draw on liquidity? The monthly fair value gap. You see, this fair value gap to the downside, that becomes your draw on liquidity. What liquidity are we talking about? Internal range. This now becomes external range liquidity, right? In here, you've got internal range liquidity. Right in here, you've got internal range liquidity of sell stops, and price is likely targeting those sell stops, internal range liquidity. Meaning when you go to a lower time frame, you need to be defining your premium arrays and your discount arrays, which are going to be your target. So you can see here on the weekly chart, this is our gap. On the monthly chart, we've got our fair value gap. Expect price to trade to the lower part of the monthly fair value gap. That gap is to the downside. So right now, the draw on liquidity on dollar index is to the downside. But for us to be so sure that this market has turned, right, that fair value gap needs to be filled on the monthly chart, but only after we have a protraction phase to the upside, a retracement, or basically a redistribution into premium. A redistribution into premium, say on the daily, before a move to the downside. You can see market is turning a bit, but we are still above these old lows. We really need to see a redistribution in fair value for shorting opportunities before the market moves lower. So I would say this week I am bearish on the dollar index due to the points that were noted by Powell, number one, and also NFP, the number that we saw on Friday, NFP number and the unemployment rate number. That's going to put pressure on dollar index. So when you look at the calendar, right, with that in mind, when you look at the calendar, what you need to see, you can see Tuesday, it's not going to be an ideal day to trade tomorrow. But yeah, you can play around the markets and just see how price reacts to those levels that I've already mentioned. But on Wednesday now, that's an ideal day to be a trader. That's an ideal day to be a trader. We've got crude oil inventories. We also have Powell. He's definitely going to stick to his guns on what he's talked about last week during the FOMC. So expect a protraction phase into premium area. Right now, we now have a fair value gap, right? And that fair value gap starts from this candle's low to the current candle's high, right? Which is Monday's candle, this green candle here. The high of that candle and the low of Thursday's candle that defines our fair value gap on the daily chart. And inside that range, we expect the price to find resistance before we push to the downside. Friday's candle becomes your breaker. You can see it broke this old low. One is relatively equal lows. That's a breaker. So any retracement into this level here, expect the price to face a huge level of resistance for a push to the downside. So target, you're looking at 104,380, right? Now, when you go to the 4-hour chart, right, this is where you need to see your clear market maker sell model, right? So you already have your fair value gap on the daily chart. Now that fair value gap on the daily chart, once price trades towards the equilibrium of that fair value gap, which is right here, and you can see this equilibrium here, this equilibrium point of the daily fair value gap coincide with these relatively equal lows. So expect price to, once price reaches this level, expect a huge resistance. Price will face stiff resistance for another expansion to the downside, targeting 104. Let me just get the proper price. So we're looking to target this old high here. So that's 104,380. 104,380. That's my weekly target on dollar index. And then after that, then you expect these levels to provide what? Support. And you can see already from today's price action, even though it is a Monday, I'm not saying you should not trade on Monday, guys, but when you are trading for a living, when this is now your business, yeah, Monday basically is not an ideal day to trade. But if you're just that type of trader who will be like, no, let me get into the markets and see what's there, you wouldn't really know the framework that the market is setting up for the week. You're just jumping in. So once price reaches the 104,380 level, right, I expect price to find some support there. But that's the target on dollar index. So expect this H4 bullish order block to provide what? Support. And you can see today, Monday, market opened, just dropped a bit into that bullish order block. It's a high probability also, a fair value gap. That price is retracing to the down, to the upside, and then hunting for shorting opportunities in the premium range. So yeah, that's what I'll be anticipating. That's what I'll be looking to do on dollar index. I'm looking for shorting opportunities. I'm expecting dollar to still be under huge pressure as the week unfolds. I expect dollar to face a lot of pressure. Now, when we look at Euro USD, looking at Euro USD, which is now the opposite of what we just spoke about on dollar index, right? With Euro USD, in regards to Euro USD now, you need to be in a position to see ask yourself if Euro USD can trade into the monthly fair value gap below. You see that fair value gap to the downside. Ask yourself if Euro USD is going to look to trade into this level here, right? Ask yourself. But as of now, since we are looking for shorting opportunities on dollar index, we're looking for dollar to be under pressure, then longs are ideal on Euro USD. Longs are ideal from discount. So this is today's price action. That's our fair value gap number one. We also have another one right there. That's a fair value gap. Let's go to the weekly chart and see. You can see on the weekly chart, we've got a bullish order block, but it's not a high probability, just the same as on dollar index. This is not a high probability bullish order block because it's not accompanied by a fair value gap, right? Yes, we do have one here, but the range is too small, right? The range is too small. So we've got 1 and 2 bullish order blocks. So expect euro to find huge support when it returns to those levels. Now, when price retraces to the downside, when it reaccumulates in fair value, you need to have euro fundamentals coming out positive for you to go long on euro USD. So longs are ideal on euro USD from discount array, and this is an initial. So we've got this imbalance here, right? And then we also have this level here, right there. We also have that level. So expect euro USD to find support somewhere around these levels here, say 1.069, which is 1.07, right? 1.07 and 1.066. Expect euro USD to find support inside this level for a target to the upside. Now you can see here euro USD, I think on H4 we've got some SMT divergence in comparison to dollar, right? So we've got level here, and you can see euro USD has traded well above the order block, right? Euro USD is traded well above this H4 order block. If we go to dollar index, right? If we go to dollar index, you can see dollar failed to trade below that. See, that's SMT divergence. Dollar failing to trade below this old low at the time when euro USD traded above the bearish order block. That's SMT divergence. That's strength coming into dollar index, and that's weakness coming into euro USD. That weakness on a Monday in euro USD, the weakness on a Monday in euro USD, basically when you're looking at it from an institutional point of view, right, is reaccumulation, price trading into fair value, into discount for a push to the upside, right? Now remember, you need to be well aware of what's happening around, because this could also signal, this high could signal a run-off stop, internal range liquidity for a further move to the downside on euro USD, and also on dollar index, right? This could signal strength, right? Price reaccumulated in fair value for a further move to the upside. But this is a 10%, 5% chance due to the fact of what we had from power, the sentiments that were pushed by the Federal Reserve. Then we've got also the precious metal, right? Let me go to my commodities. We've got the precious metal. Now, regarding gold, now it seems to be an interesting time to be looking at gold. Why do I say that? Price is traded into a weekly bearish order block, right? Price has traded into a weekly bearish order block. Now, the low of today is the previous month high, but you need to see price trade lower into, say, weekly bullish fair value gap before another move to the upside, right? You need to see price trade into weekly fair value gaps before another move to the upside. So looking for long entries, expecting the precious metal to resume its uptrend after trading into discount, right? So expect the precious metal to trade well above 2000 again in the coming days or next week. So it's not going to be like instant, but you can see already we've got our first discount array there in the form of a fair value gap. Now that previous month high is crucial. The previous month high is crucial. Let's mark the previous month high. Right. This high is crucial in terms of targets. So we're talking of 2009.27 per ounce in the precious metal, right? And we also have monthly bullish order block right here, right? We've got a monthly bullish order block. So take note of those price levels when we go to a lower time frame. Now we've got these old lows here. There's internal range liquidity there of sell stops. Remember, we are anticipating dollar to be under pressure. That in turn results in strength in the precious metal. So expect gold to retrace to the downside for another push to the upside. So the previous month high is crucial level. I didn't want to see a reversal of the bearish weekly order block is to be respected. So if the bearish order block on the weekly chart is to be respected, which order block are we talking about? This level here, right? If this level is to be respected, then price should not trade above 2009, right? If that OB is to be respected, you need to see the high inside this order block being respected. But I still maintain that this here, this is just re-accumulation, but we need price to trade into fair value, right? For another push to the upside. And that fair value is coming right in here on that weekly fair value gap. So once price reaches your 1940s, your 1930s, early 1930s and late 1940s, that's when you should anticipate a move to the upside. Then finally, we're going to look at Aussie dollar. We're going to look at Aussie dollar. Let me just go to the chart quickly. Let me go to the Aussie dollar chart. So remember, guys, when I give you this weekly forecast, most of them are just like rough patches. You have to do now your own work. So if you're not in the mentorship, this might sound weird, but this forecast is mainly released for the guys in the mentorship group who already know what we talk about, who already know the things that I've been taught. And if you're not in the mentorship, I do apologize. You can always send me a message and get more information on how to join the mentorship. So looking at Aussie dollar, right? Price is trading towards the bearish monthly fair value gap. We've got some relative equal highs there. So you can see on the monthly chart, price is trading into a bearish fair value gap. This was highlighted a while back, but that's where price is heading, right? The moment dollar is weak, Aussie dollar is going to trade into that monthly bearish fair value gap. We've got some relative equal highs coming in right here. These two highs here, the current month high and 2 months ago high. Meaning, let's see, expect further retracement into the monthly bearish fair value gap. Key levels of these reversals. Let me highlight the key levels that we should anticipate this price chart to trade to, right? So if we go on the daily chart, okay, but before we do that, right, price is trading into this fair value gap that's accompanied by an OB. That becomes a high probability level for shorting opportunities, but we still have a long way to go for that. We've got this bullish order block here, right? This bullish order block is also an ideal area for you to be hunting for long entries. So in the coming week, I'll be looking for Aussie dollar to trade into discount for a further push to the upside, probably targeting this internal range liquidity above these relatively two equal highs. You see, that's the narrative. So when you go to the weekly chart, right, you need to be defining now your discount range. Right? So that's our weekly fair value gap. And this is the equilibrium point. Once price reaches the equilibrium point of an array, you become interested. But sometimes it does not really fill the gap, right? It will find support once it reaches equilibrium of an array. Then applies as equilibrium of a order block, whether it's a bearish or a bullish order block. The moment price reaches equilibrium, then you become interested. You find narratives that can fulfill the condition that you are looking for. So for instance, right now, if price does reach 0.64416, right, then you become interested in the market to see if whether price is going to find support. And that comes now in the form of the calendar, right? So for instance, I think we've got some high impact Aussie dollar news. Right, we've got RBA rate decision. That's tomorrow towards the close of the Asian session. That should make it interesting. So when you go now to the daily chart, what are the chances that we're going to see the next day's candle filling up the fair value gap? Chances are very high, right? Once that gap is filled now, that's an initiative. That's your clue for sign to take off, targeting 0.65 to 0. So you see these relative equal highs here, right? They're just too obvious, you see. They're just too obvious in terms of price trading to those levels. So expect price to reach those levels in the coming week, this current week that we are in, and towards also next week. If price does not reach this week, why would we lean towards that? Because we are also anticipating dollar to find resistance in premium for a move to the downside. So that's pretty much about it. So hunting for shorting opportunities in majors, Aussie dollar, New Zealand dollar, Pound USD, and also Euro USD, and then longs on USD CAD, USD CHF, except USD JPY, right? So yeah, you just need to be following through, guys, and make sure you do your daily market outlook, and you see how the daily candle closes, and also be in a position to highlight where you anticipate the market to trade to. If you have any questions, you know I'm always here. You can send a message, and then we can attend to those messages. So yeah, just to wrap up a bit, right? Let's go to the daily chart for Euro USD. So this is the daily chart for Euro USD, right? It is a slow Monday. Monday has been very slow today because of no news to drive the market. But look at this price action. It still follows the algorithm. It still follows the algorithm. On Euro USD, SMT divergence with dollar index. SMT divergence with dollar index. The chances now of euro trading lower to fill up this daily fair value gap, chances are very high, right? Because you can see here, we've got EURUSD trading above an old high, run off stops. When you go to dollar index, you go to daily, you see the same range. We should have seen dollar trade lower, you see. So now the chances of Tuesday, Wednesday price retracing to the upside, they're very high, filling up this daily fair value gap. Yes, some are gonna say, but okay, if that's what we should expect, why then don't we short euro? Why don't we go long on dollar index? That's just going against now the what? The trend. You'll be going against the trend, which for now we can clearly see that dollar is trying to turn to the downside, but we need that narrative to be filled on the weekly chart, a retracement into fair value before another move to the downside. And that can only be seen on H4, market maker sell model. But yeah, what I was just trying to imply to you there is that even since it's a slow Monday and there's no drives in terms of fundamentals, market still shows you its intended pricing model, S&P divergence on EURUSD and dollar index. You can also try to look at, say, pound USD, right? Then you can go to the daily chart for pound USD. You can see pound USD created a new high. You go to Aussie dollar or same thing, Aussie dollar. Yeah, not much, but it's still a high. You go to New Zealand dollar. See, New Zealand dollar only returned to fair value. Look at the high that we are talking about. On EURUSD, it was the 20th of September. If you go to the 20th of September on NZD USD, 20th of September, it's this high here, right? Yes, price did trade above the 20th of September high, but we still have these two highs, meaning this price action on NZD USD is just a return to fair value at a time when Euro USD is creating a high, Pound USD is creating a high, Aussie dollar also. Let's just look at Aussie dollar quickly. So we're looking at September the 20th, right here. Yeah, on Aussie dollar traded above September the 20th high. So only on New Zealand dollar prices returned to fair value. And you can see New Zealand dollar, the daily price action. Look how bearish it is already. See, it's already bearish. So you'd have been anticipating all this. When price reaches this level here, expect price to move to the downside. It's not rocket science, guys. Don't make it rocket science. Just follow through with the teachings that you've got, and you are definitely going to make progress. So yeah, that's pretty much about it. And thank you guys for those who have managed to join the weekly forecast, and for those who haven't managed, you can always watch the video once it's uploaded on YouTube, once it finishes processing on all that. So yeah, I wish you guys good luck and happy trading in the coming days and following week. Thank you guys.